Okay, ladies and gentlemen, we're back. We have a brand new video today, and this is kind of a cool one. Last week, a couple days ago, we released a video called How High or Low Will the Market Finish 2019? And that was a really popular video, and based on some of the positive feedback that we got, we decided to make this video. So in that last video, which I will link in the description, again called How High or Low Will the Market Finish 2019, we talked about how taking the S&P 500 price and the VIX can be used together to determine what the market is currently betting on, what the market is currently predicting in terms of where it will finish 2019. Now, not only are we able to take the S&P 500 price and the VIX to be able to determine that type of an estimate, we're able to take it much less or much further out in time, actually any time frame that you want. So on this video, we're going to talk about how high or low the market will finish the next 30 days. And not only that, I'm going to show you exactly how you can figure out that number for 20 days, 10 days, 70 days, it doesn't matter, and I'm going to give you a tool after this video to be able to do it all yourself. But a little bit of a refresher. What is the VIX? The VIX is crucial for figuring out market expectations. Now, according to most people, Financial News, CNBC, Bloomberg, the VIX is the fear index, which is a numerical representation of the amount of fear or risk at any given time, which is shown by the buying and selling of options on the S&P 500. Now, I've never met anyone that actually explained how the VIX is calculated. So, I kind of throw that one for the birds. But what the VIX actually is the VIX is actually the one-year expected move in the S&P 500. And if you've watched the video that I have linked in the description that we posted about a week ago, you would know that too. But actually, we can figure out based on the VIX, right? So the VIX can then be used to find the expected move for any time frame at all. So yes, we could figure out what it is on a 365-day basis, but now we can figure out what it is at any time frame we want. And the way we figure that out is we take the current S&P 500 price and we multiply it by the VIX as a percentage. So for example, if the VIX is a 20, it's 0.2. And then we multiply it by the square root of how many days we want, in this case 30 over 365. Now you're going to see this formula and this equation a lot in this video, but this is exactly how you can figure out what the expected move in the S&P 500 is up or down in any time frame at all. And let's kind of break it down to what some of these numbers actually look like. So you can see right here, with a $2,500 price for the S&P 500 and a 10 VIX, right, the equation for 30 days in the future comes out to be as follows. We take 2,500 and we multiply it by 10%, VIX, 10, and then we multiply it by the square root of 30 over 365. So it's the exact same equation that we shared right here on the screen, but now we're actually putting it, which means we have an expected 30-day move of up or down $71.67. Now we take it a little bit of a step further. If you look down in the last row on this chart right here, as of yesterday filming this, we had an S&P 500 price of 2450.88. And at that time, the VIX was 2650. So we would take the normal equation, 2450.88, and multiply it by the VIX as a percentage, in this case, 0.265. And then we multiply it by the square root of the days, in this case, 30 over 365. And with the S&P 500 at 2450.88 and a 2650 VIX, the 30-day expected move is $186.20. Very straightforward. But ultimately, how can we take this information to make money? Well, there's a few ways to do it, right? Full disclosure. Understand, the market is betting hundreds of billions and trillions of dollars on these expectations, which means, while they might not be 100% accurate, they are as accurate as you're ever going to get. Otherwise, there wouldn't be hundreds of billions, if not trillions of dollars agreeing on this number basically all day, every single day. So there's two ways to kind of look at it. One is forward-looking. So what you can do is you can do this equation for what the S&P 500 is now and what the VIX is now. And you can look out 30 days. So for example, if the expected move in the S&P 500 over the next 30 days from whenever you're watching this video is up or down $100, you can go on your chart and you can go ahead and draw lines $100 below and $100 above the current price of the S&P 500, and you can use that into context. Remember, our kind of rule of thumb is if you already own stock and we hit that kind of high end of the expected move, well, maybe it's a good time to start considering taking off some of your winners. And on the other side, if you're maybe in some cash on the side and all of a sudden the expected move is breached to the downside, well, maybe that's a really good opportunity to think about starting to layer into certain positions. And that's one way to look at it, and that's kind of forward looking. Now, the other way to look at it is more backward looking. So what you could do is you could actually look back 30 days from where you are right now. See what the S&P 500 price was on that day. See what the VIX was on that day. Run through our equation and then compare it to where the S&P 500 is at this point. Because again, if it's near the high end of the range, that's something that's interesting to you. And if it's near the low end of the range, that's something that's interesting to you as well. But I made it a little bit simpler for everyone. I kind of made a little bit of a Google document, which I will link to below in the description of this video, as well as explain what to do. But basically, it's very, very simple. I have inputted this information for you. So as you can see, the S&P 500 price will always be imported into this Google sheet. The price of the VIX will always be imported into this Google sheet. So as the close of today, the price of the S&P 500, 2531.94. The VIX, 2138. And now this column, cell B3 right here, cell is B3 is the only one you actually want to go ahead and update. And the way we update that is how many days. So with a 2531.94 S&P price and with the 2138 S&P price, 30 days from now, the expected move, $155.19. And actually, I'm going to make this a little bit bigger so everyone can actually see this. Now, the high end of that range, based on all the information that we have right now, is 2687.13, and the low end of that range is 2376.75. Now, this is the fun part. Now we can kind of change these numbers based on this information. So rather than looking at 30 days, we can just put in 90 days and everything will work accordingly. Rather than putting in 90 days, we can look at 1 week, for example, and we can see there's a $74.97 expected move in the S&P 500. So again, I will link to the previous video in the description where we talked about how to figure out the expected move in the S&P 500 for the next year. Now we're taking it a step further and we're saying we can actually figure that out over any time frame we want. And I will also link in the description to this Google document, how you can copy it and put it in your Google Drive yourself. And rather than trying to figure out that equation yourself, you can just come here and type in any time frame that you like, and you'll be able to figure out exactly what the market is agreeing on at that point in time. I will see you all in the next video.